What's going on, everyone? My name is Jeff. So, health insurance stocks have been in free fall mode for over 3 months now. And guys, some of these prices are becoming very, very attractive, especially UnitedHealthcare. So UnitedHealthcare is a $212 billion company, and it currently trades around $220. And almost every analyst on the block has a price target on UnitedHealth at $270 and higher. So let's quickly track the 3-month progress of 4 very large health insurance companies. So here in the white, guys, I have Anthem, ticker symbol ANTM, and it is down 10% in 3 months. In the light blue is UnitedHealthcare, ticker symbol UNH, and it is down 16.5% in 3 months. In the orange is Humana, ticker symbol HUM. This is also a health insurance company, down 18.6%. And of course, down here at the bottom in the teal color is Cigna, okay? Cigna is actually down 23.5%. So we're gonna get into why these companies are getting so beat down right now. And then we're really gonna zoom into UnitedHealthcare. We're going to talk about their last earnings report and at what price do they become a strong buy. Now guys, if you're new to this channel, make sure to hit the subscribe button so you don't miss any content or update videos. And feel free to drop a thumbs up on this video if you enjoyed it. It helps keep me motivated to keep putting out the best stock market content on YouTube. So why have healthcare stocks been dropping so dramatically in price? That pretty much tells you everything you need to know right there, okay? So of course they've been under pressure for months, and that is mostly from Bernie Sanders proposing aggressive healthcare reforms and his plans to eliminate private insurance in favor of government-run universal care. And of course, guys, this is part of his campaign for the 2020 Democratic presidential nomination. Most of these companies are seeing great earnings reports, and they are all getting traded down on news this. So in my opinion, guys, we can kind of stop right here. It might be very, very high risk to touch any of these stocks until we know the outcome of the 2020 election, okay? And that really is well over a year and a half away. And so what you're probably gonna see is a lot of power struggle. This is just my opinion, but you're going to see UnitedHealth and Cigna, other companies, the stocks will rebound and probably get some gains back. And then of course, Bernie Sanders is going to come out, talk about more aggressive healthcare plans, and you can probably expect the stocks to go back down. I would almost be willing to say every time Bernie Sanders makes a public speech, you could probably short these stocks and make a quick gain. And I know at some point, valuation is just going to make way too much sense, that it's going to be undeniable to buy. Like I said, even here at this price at $220, I feel like UnitedHealth is a screaming buy. But there is something stopping me. It is the power of tongue, in that if there is a chance that Bernie Sanders does get elected into the White House and some of these things do start to take effect, all of these private health insurance companies could be getting shrunk in market cap and share price for years to come. Back on Tuesday, UnitedHealthcare blew their earnings report out of the water. They beat on Q1 non-GAAP EPS by 13 cents. And their revenue estimate of $60.31 billion, guys, they beat that by $590 million. So if you were to subtract all the political noise that is going on right now, I think UnitedHealthcare easily could have run 7 to 10% on this good earnings report. And they even signaled very strong guidance for the remainder of 2019. But as you can see right here where I've got my marker, guys, on the initial news of the earnings report, the stock popped up close to $238 a share, and then it spiked down, guys, and got very, very low. Did not recover for the remainder of the week, even trading as low as $208. And that was on Wednesday, so it did make kind of a recovery, and it got itself back up to $220 a share from that low. But like I said, guys, not a normal response to a great earnings report and excellent forward guidance. And of course, news of this did not help either. So shortly after the earnings report, Goldman Sachs came out and they trimmed their price target almost 5% to $291. And of course, that is out of fear of the policy proposals. JP Morgan Chase cut their price target almost 22% to $235, citing the same political risks. And then Steven Scott Fidel also downgraded his price target on UNH 8% to $270. So like I said, a great earnings report and great guidance, followed by a slew of downgrades due to political chatter. So if you're a long-term investor, at what price does UnitedHealthcare start to become an attractive buy to you? Guys, I think it is a buy right now, okay? But you do need to understand the element of this political talk is that this could possibly have long-term effects on the stock depending on who gets voted into the White House. And conversely, this could also have a parabolic effect on these stocks if and when the Democrats do not get into the White House, or more appropriately, if and when it is known that Bernie Sanders is not getting elected president. So a lot of this, guys, is just dependent on politics and who does and doesn't get voted into the White House. Because going off of valuation, UnitedHealthcare is very, very undervalued at these current prices. Honestly, I think UnitedHealthcare is going to go lower. And it would not surprise me if it retested the 200 level, simply because of what I mentioned earlier in the video. Anytime Bernie Sanders has a press release or anything like that, you can kind of anticipate these stocks to drop. And as far as that goes, you might see these stocks traded down very, very low over the next year and a half, because we can throw all the fundamentals and earnings reports and everything completely out of the window, because this is all very news sensitive. Also a possibility that these private companies will be reduced in the future. So just keep in mind, if you are going to invest in UnitedHealthcare or Cigna, my best advice is to invest in them very lightly. Anyways, guys, that's all I got for the video. Drop a comment. I would really like to talk with some of you in the comment section about this. Make sure to drop me a like, guys, and thank you for watching.